All right, in this video, I will be teaching you my car loan process. The car loan process is a very simple and transactional way to sell life and disability insurance to anyone that has a loan on a vehicle. Now, before we get into the how of the car loan process, let's talk about why it's important and why you should use it. First of all, you are a risk advisor. That means that you advise people of the risks they face. And in this case, potential future financial risks. And look, there are potential risks when financing a vehicle, whether we realize it or not. So let's go through each of the three main risks that our customers face when they finance a vehicle and how they can protect against them. Risk number one, physical damage risk. When a customer has a loan on a vehicle, the vehicle isn't completely theirs, but it's the bank's too. And if the vehicle is damaged or even totaled, the bank will still need their money back. So there is the financial risk of having to pay to repair the vehicle if it is damaged, or even having to pay the loan off if it is totaled. That is the risk. The way to properly protect against that risk is through full coverage car insurance or comprehensive and collision coverages. Risk number two, loan payoff risk. When a customer has a loan on a vehicle, they have debt to their name, debt that has to be repaid regardless of the circumstances. Now, if the customer that got that loan were to pass away prematurely, there is the financial risk of leaving that debt behind for family or next of kin to deal with and find a way to pay for. That loan will not just disappear, but it would go to the next of kin or the closest living relative, the customer's family, right? That is the risk. The way to properly protect against that risk is through life insurance. And risk number three, loan payment risk. When a customer has a loan on a vehicle, they didn't use their own money to fully purchase the vehicle, but instead borrowed money from the bank. And they went under contract to pay the bank back over a certain period of time, typically with monthly payments. Now, if the customer were to get sick or hurt and unable to work for an extended period of time, there is the financial risk of having to exhaust savings accounts to make those car payments to keep it. They may have to sell it because they can't afford it anymore, or the bank may even take it back if they stop making payments, which would negatively affect their credit for many years. That's the risk of getting sick or hurt and unable to work to make money. The way to properly protect against that risk is through disability insurance. And again, as a risk advisor, you need to make sure that your customers know about these risks and how to protect against them. Aside from that, you will want to use this process for your own sake because you will be able to write more life insurance than you ever have in a very simple and transactional way. You guys, whether you are used to selling a lot of life insurance or not, I am confident that this process will take your life insurance production to the next level. And that means more money in your pocket. You guys, this has been a staple process that has sold me and many other team members a lot of life insurance policies. All right, let's move into the how of the car loan process. Recognizing opportunities. Listen, anytime someone has a loan on a vehicle, that is an opportunity to use this process. It's that simple. So look, you can utilize this process a lot. I mean, think about how many people you talk to throughout the day that have loans on their vehicles. Okay, so the car loan package has 7 steps. Step number 1, the pivot. If a customer calls in to add or replace a vehicle that has a loan on it, you won't need to pivot. So skip this step and start with the transition. Now, if you see a customer has a loan on a vehicle, but they didn't necessarily call in to add or replace that vehicle, kind of like a service transaction, then you will need to pivot. To pivot, simply confirm the lien holder or bank on the policy. Doing this will set yourself and your customer up for a natural and logical transition. And it removes any sort of sales pressure at the beginning. Let me demonstrate. I show that you have a loan on your 2022 Toyota Tacoma through ABC Bank. Is that still correct? Now, after confirming the lien holder, move directly into the transition. Step number 2, the transition. With the transition, simply introduce the car loan process. Here's my transition. Where you have a loan on your vehicle, I am going to quote you the car loan package and you can tell me what you think. Okay, so notice how I didn't ask permission? I just told the customer that I was going to do it. So don't ask permission, but just tell them that you are going to quote them. This will allow you to stay in complete control of the conversation. And then I like to end by telling them that they can tell me what they think. That way there is no sales pressure for me as the agent or for the customer. Step number 3, gather info. you will need the following 4 things to quote the car loan package: the vehicle information, year, make, model, and VIN, the loan amount, monthly payment, and the customer's occupation. And listen, you are already used to gathering information for the vehicle. All you need to do is to add the loan amount, monthly payment, and the customer's occupation. That's it. There's no right or wrong way to gather this information, so however you choose to do it is great. Now, as you are quoting the new vehicle, simultaneously quote the life insurance and the disability insurance for yourself to see. After you have the information and have quoted it for yourself to see, you can move into the presentation of the car loan process. Step number 4, the presentation. The presentation has 4 steps. Step number 1, intro statement. This is how I start the presentation. So there are 3 things that I think about with your loan. That's it. Step number 2, risks. In this step, go through each of the 3 risks a customer faces when they finance a vehicle: physical damage risk, loan payoff risk, and loan payment risk. With each risk, focus on the problem or the risk, the solution, and the benefits. I have spent a lot of time developing these word tracks, and these are the ones that work best for me and for other team members. Let's go through each. First, physical damage risk. The first thing that I think about is we want to make sure that if something were to happen to your vehicle and it were to be damaged, that it can be repaired or replaced with little to no money out of your pocket. I have quoted your comprehensive and collision deductibles at $500, meaning the most that you would pay to repair or replace your vehicle would be $500. Does that make sense? Now, if they aren't adding or replacing a vehicle, instead of telling them the deductibles that you have quoted, just confirm the deductibles that they already have on the current vehicle with a loan and make sure they understand how they work. Let me demonstrate. I am showing that your comprehensive and collision deductibles are at $500, meaning the most that you would pay to repair or replace your vehicle would be $500. Does that make sense? Second, loan payoff risk. The second thing that I think about is where you have $40,000 financed with ABC Bank. We want to make sure that if something terrible were to happen to you and you were to pass away prematurely, that loan can be paid off. That way your family doesn't have to struggle to make those car payments and that they could keep the car. That last phrase is powerful, so make sure to use it. It is a disturbing word that will cause the customer to want to act. No one wants their family to struggle. And third, loan payment risk. And the third thing that I think about is where you have a monthly payment and you are working. If you were to get sick or hurt and couldn't work, we want to make sure that your monthly car payment gets paid. That way you can keep the car and it doesn't negatively affect your credit. All right, guys, that's it for the presentation. It is extremely simple and transactional. The presentation allows you to explain the risks or the problem and the solutions to the problem, as well as the benefits. And lastly, you probably noticed, but I purposefully do not use the words life insurance or disability insurance initially. And maybe you're wondering why. Well, let's talk about that. In your experience, when people think about life insurance, what do they typically think of? I mean, think back to what you thought before you worked here. What did you think about life insurance? In my experience, people are generally thinking one of 2 things. 1, I'm not going to die, or 2, I have it through work. And listen, when you get one of these answers or objections from your customer, it is extremely hard to get them to even listen to you because they feel that they are covered. But it's also very hard to help the customer see the value of what the life insurance will do for them. The customer doesn't give you time to explain what the life insurance can do for them because they are stuck on what it is and that they don't need it, when they really probably do. Same goes for disability. Most people think, 1, I'm not going to get disabled, or 2, I have it through work. Listen guys, there's a general misunderstanding about life and disability insurances with people. And the reason I leave out the words life insurance and disability insurance is simply so I can help the customer understand what they actually do for them. It's strategy and it works. Now, if the customer agrees to the car loan package and they like the quote, or they don't tell me no, I will then get into the details of what the policies are called and how they will show up on their bill. But until then, I leave those words out and focus on what they will do for them rather than what they are, the solutions and the benefits. Step number 5, the close. By now, you have the quote for the car loan package and you've explained the risks or the problem, the solution, and the benefits. You are now ready to give them the price. To quote the price, simply quote the bundle and be quiet. Quote the car insurance, life insurance, and disability insurance as one total price and let the customer tell you what they think and be quiet. If you have pivoted off of a service transaction, then quote their total monthly bill and then be quiet. Remember, we are trying to present it in a way that it's hard for the customer to say no. Now, if the customer doesn't respond right away and there's silence, don't feel like you need to talk. The customer is simply internalizing everything you have just taught them and quoted them. And if they have questions or concerns, this is where those will surface. They are going to bring them up, trust me. So here's how I quote the bundle and be quiet with someone adding or replacing a vehicle that has a loan. With that said, that total is coming back to $120 a month. Or with the service transaction pivot, here's how that sounds. With that said, adding the car loan package would bring your total monthly payment with us to $200 a month. Step number 6, overcome objections. You will generally receive one of two responses from your customer. The first is, okay, sounds good. Boom, that's what we like. If you get that response, you won't need to overcome any objections. So skip this step and move on to step 5. And listen, you are going to get that response a lot. It's great. The second response is, that's pretty high, or is that the lowest you can get it? This response is an objection. They have an issue with it. And that's okay. If they have an objection like this with price or whatever it may be, or they aren't good with what you've quoted them, do what you can to overcome the objection. Remember the 4 steps to overcoming objections: acknowledge, ask, respond, and close. I have found it to be most effective to tell them that they need the car insurance because of the loan, but that they have the option to add the life and disability by using an option close. Let me demonstrate. Not a problem, I totally get it. So yes, you do have some options. We obviously need to keep the actual car insurance, your comprehensive and collision coverages where you have a loan with ABC Bank, but of these other 2 coverages, one, where we would pay off the loan for the vehicle if something terrible happened to you and you were to pass away prematurely. That way your family doesn't have to struggle to make those car payments and they can keep the car. Or 2, where we would make your monthly car payments if you were to get sick or hurt and couldn't work. That way you could keep the car and not have it affect your credit. Of those 2, which one makes the most sense for you right now? Let the customer answer and tell you whatever is most important to them right now. And then simply quote them the total again and be quiet, just like you did before. If they give you another objection and said they only want to do the car insurance for now, then just do the car insurance. And you can let them know that we will revisit the other coverages at a later time, and then follow up with them. Now, if they do decide to do the life and or disability, move on to step number 7. Step number 7, gather info. Gather what you need to submit the car insurance, life insurance, and disability insurance. Let the customer know if they need to sign anything, and make sure to clarify that the life and disability are separate policies and how they will show up on their bill. Listen, now that they understand what the life and disability will do for them, you can tell them what they are. But do your best to keep the focus on the total bundled price and the benefits. Alright guys, that's it. That is the car loan process. It is a staple conversation and one that works really, really well. And honestly, I believe that you can double your life production simply with this conversation. And that is from experience. So use it.